If we're sitting here a year from now and gold and silver are not at all-time highs in every currency around the world, I will be amazed.
Well, let's talk about that, too, and let's talk about central banks around the world, because we're now living in a paradigm where the central banks don't trust each other, and instead of being net sellers of gold, the central banks, most of them anyway, are net buyers of gold. The Bundesbank would like to perhaps get their hands back on their own gold from the New York Fed and from the Bank of England, I believe, and yet they're not allowed to see it. Paint me a picture for those that are listening to whom this information is somewhat new, who maybe still don't have any physical gold and or silver. Paint me a picture. How rare is 1 ounce of physical silver and 1 ounce of physical gold?
Well, there's only about 1 billion ounces of physical silver above ground existing, because it's all been used up by industry, even though it's still a monetary metal. And most of that $1 billion ounces is in vaults owned by people. I mean, and just about all of the new supply is used for industry as well, maybe 2/3 of it. So there's almost no physical silver out there, which is why they have to manipulate it so much. As far as gold, I think it's about 70 or 80 million ounces come out of the ground a year, but half of that is used for jewelry and the rest is bought for investment. And on top of that, gold peaked in production maybe 10 years ago, and it's going nowhere. In fact, the outlook for both gold and silver production is down. For silver, it could be precipitous, because 2/3 or more of silver comes as byproduct from base metal mines. So as far as the supply, it's just not there. But if you're talking the central banks, to start with, let's say the central banks had all the gold they said. Let's say if the U.S. had its 8,133 tons of gold, which it doesn't, it would only be worth, I think it's about $500 billion or something. I mean, we have almost $17 trillion of on-balance sheet debt, let alone the $5 trillion that Freddie Mac and Fannie Mae have, let alone all the unfunded liabilities, 100, 200 trillion, and these numbers are all growing. So it's immaterial even if they had the gold. But the fact is, most of these central banks have gotten rid of the gold, and I guide anyone to Google. This was a real bombshell that came out this week by GATA. Of course, they found a 1999 IMF study which the IMF said that 15% of all the central bank gold had been leased out for whatever reason. That was before the gold bull market. Can you imagine what they've been doing since? So the fact is, the Bundesbank's trying to get their gold back from the Fed. The Fed is saying, well, you can't really see it. You're seeing a lot of other central banks ask for their gold back. The Dutch are worried right now. The Venezuela just took theirs back. I saw Romania, Ecuador. Eventually, they're all going to try to get it back, and most of them are going to find it's not there.
Yeah, and it's just amazing. And the reason I wanted to cover that, Andy, is because obviously those who've been paying attention to what we're doing over the past several years, they know that we're big gold and silver bulls, silver specifically, because it is so rare. And I just want to draw the distinction between silver and gold for the audience that, as you guys have noted at Miles Franklin and Eric Sprott has noted with Sprott Funds, Sprott has said that they're selling, 50, 55 ounces of physical silver they're seeing demand for every 1 ounce of gold. And the problem, as you and I both know, is that it's only pulled out of the ground at a ratio of about 9.5 ounces of silver for every 1 ounce of gold that's mined. And so it's unsustainable. I mean, there's so much demand for physical silver that if the banks, if the criminals, the cartel weren't papering over it and manipulating it, silver would have probably surpassed $100 or $200 an ounce long ago.
Right. And actually, I put out a piece maybe a week ago called Surging Silver Investment, which everyone should Google. Just Google that with the words Miles Franklin after it, and it'll come right up. And I showed too. I was saying, look, Eric Sprott is saying this about his gold and silver, what he's been seeing, and I said, well, let me look at all the purchases of the 5 big closed-end funds, meaning FIZ and PSLV, as well as Central Fund of Canada, Central Gold Trust, and Silver Bullion Trust, and then add it up with the mint sales that the U.S. Mint has seen for gold and silver eagles. And when you look at it over the past 3 years, not only is it close to 1-to-1, but it's been decreasing, meaning people are buying more and more silver compared to gold each year. I think it was the total amount of dollars that went from gold over silver was like 2.3 times the amount in 2010, then 1.7 times the amount in 2011, and now it's like 1.3 this year. Meaning, literally, you're seeing the same amount of gold and silver investment, yet the gold-silver ratio is 50-to-1. And as you say, the silver coming out of the ground is only 9 times as much as gold, whereas for centuries it was 16 times as much, meaning not only is it being depleted by industry, but it's also depleting in the ground quicker than gold is. So I think it's a very explosive set of supply-demand factors. My forecast for the longest time has been that we will we will well go below the historical 16-to-1 ratio and potentially into single digits.
Yeah, and isn't it interesting, Andy, that the criminal cartels, let's say that you and I were criminal mafioso banksters, and we knew what was really going on, and we've known it for better than a decade. We've known it for multiple decades, but when things got serious back in the early 2000s, we knew that we needed a game in place to help stem the tide for the demand for physical. So what would we do, Andy? We might put our heads together and come up with an ETF, some sort of vehicle that would allow the uninformed common man to have what he would think is an investment in gold, and we might call that the GLD, and it might be sponsored by a criminal bank called HSBC. We might come up with one for silver called SLV, and that one might be have a custodian called JP Morgan, another criminal bank. So isn't it interesting as we look back in time, we can see exactly what's happened here, and there are so many poor folks that are going to get crushed because they think they have exposure to precious metals when in fact all they have is exposure to criminal banking paper.
Yeah, well, I always go back and forth in that because I'm one of those people who do not believe that the government have a grand plan. I think the governments in these Western nations wake up every day with a new crisis and say, how can we paper over today's crisis? So I have a hard time believing that they have made any brilliant moves such as this. And in fact, I remember when SLV and GLD came out, I think one was in like 2006. And the other was in 2004. For the longest time, there were regulatory holdups. We never thought it would come, and then they came. And then, voila, they blossomed into these huge things. Now, of course, we don't know how much gold and silver is actually in them because they're horribly written prospectuses and because of who runs them, as you said. But clearly, they do have some gold and silver, and there is something to be said that it was created to divert interest in real gold and silver into these paper vehicles. And of course, what Andy Schekman's theory is that it's if they're ever going to confiscate anything, it's going to be GLD. I mean, why would they try to get a couple of ounces out of thousands of people when they could just take it all from GLD, which is supposedly the sixth or seventh biggest gold depository in the world? So I'm on the fence about that either way. But the fact is, there's no doubt in my mind that it certainly prevented a lot of money that would have gone into the physical metal to go into the paper.
Now, the shills and the trolls out there, be it Jeffrey Christian or who's the fella from Kitco that nobody cares for?
Nadler.
Yeah, John Nadler. The shills and the trolls out there are now, and even on YouTube, they're coming out and saying, well, the people talking about manipulation, of the precious metals, they might be right, but where they've been wrong is telling you to buy at any price. What I've always said, Andy, is dollar cost average. I'm the worst market timer in the world, but what I know is that every month I'm going to buy a little bit more silver. What is your strategy? What would you tell people to do?
Well, I would say buying at any price is the same thing as dollar cost averaging, because any price means one day it's up, one day it's down. And I'm certainly guilty of charge if you're saying that I've said to buy any price, because I don't care about the price. I care about the ounces. I think of my net worth as the people in India do, in terms of real assets that they own, meaning the amount of ounces of gold and silver you have. I know, care of the manipulation and care of the fundamentals, such as, oh, by the way, QE4, that the prices of gold and silver will keep it going up as they've gone up 20% a year for the last 12 years. And that was under fundamentals that I don't consider anywhere near as bullish as they are now. So my goal is to get out of the paper currency as fast as you can. I don't really care if the price is $17.80, $17.20. Maybe you're lucky one day and it's $15.70, and the next day you're not and it's $19.20. But who cares? Because ultimately, I shouldn't say investment. Any savings that you put into gold and silver are going to protect your wealth, whereas anything you put into paper is probably in some way, shape, or form going to take your wealth.
Yeah, and you make a great point about the folks in India. I read something once not too long ago that actually really inspired me to, stay the course and to view silver and gold not as spending money, because for a long time I was spending money, right? I was taking money that could go, somewhere else, and I was putting it into silver and gold. And when you treat it like that, it starts to feel a little bit like a luxury item. And the folks in India, the way they look at precious metals and jewelry, gold jewelry specifically, is they look at it as a tangible wealth holder for their retirement, for their future. They may be buying a luxury item like a gold necklace, but they're looking at it as tangible wealth that will always hold value. And that's the key. And that's, I think, the one thing I want to leave with people listening is that when you go out and buy a semi-numismatic coin, like a low mintage coin from the Perth Mint or from the Royal Canadian Mint or whatever, it can feel like a luxury item, right? Because you're really spending a lot of money to get this small coin. But it's a tangible way to protect your wealth as the criminals will and are destroying our currency.
Right, and again, the biggest difference between paper and real is that paper evaporates. I mean, people, especially when they own mining stocks and of course GLD, it'll go down, and when it goes down, I have plenty of experience with this personally, is you've lost money. I mean, you could say all you want, well, I'm confident, I'm a bull, it'll come back, but maybe it will, maybe it won't. You look at your brokerage account, that money is gone, and you may or may not get it back. You have a physical coin. The fact is that you are not going to do anything. You haven't lost anything. You still have your coin. And yes, you can be confident it's going to come back, but you haven't lost anything.
Well, and the last thing I want to leave people with before we talk about getting in touch with Miles Franklin is that I want everybody to just play a little exercise in their mind here. And pretend you're driving through your own small town or your metropolitan area, wherever it is that you live, and pretend that you wanted to go to Target to buy a shirt, or you wanted to go to Walmart to buy some milk, or you wanted to go to the precious metal store to buy some physical silver and gold. Where are you going to go? How many places in your town have physical precious metals that you can buy? Maybe a pawn shop? Maybe there's a coin store that has a few tubes of silver eagles. The only games in town are online or Miles Franklin or sources like that. And the only reason that they still have metal that you can get is because so few people are paying attention.
That's right. I mean, look, and when you can make the big leap of saying, I'm going to protect myself, you better be careful who you buy it from. I mean, we've been around 23 years. We've never had a complaint, A+ business, Better Business Bureau rating. We will take care of you. We will not sell you stuff that's not in inventory. We will not mark up things higher than anyone else. And we certainly won't try to push numismatics on people when they really are just speculations as compared to actual bullion. And again, we're not the only great bullion dealer out there. There are others, but you have to be very, very careful who you deal with.
As far as gold goes, Andy, what is your personal preference? Do you like the gold buffaloes? Which ones do you like?
Yeah, well, look, when it comes to gold, there's only about 5 or 6 different types really to choose from, because the working capital is so big for a mint to mint gold coins that you're really only going to deal with the mainstream government coins. We prefer, generally speaking, the most liquid, well-known names like the Buffaloes and Eagles and Maple Leafs. But again, there's not really that many choices. When it comes to silver, there's more choices out there because there's a lot of mints, and you have to be careful. You can never go wrong, again, with the Eagles and the Maple Leafs, but there's something to be said for certain generics bought from the right, reputable source.
Why don't you give people the phone number they should call so they can get hands-on service from Miles Franklin to buy physical precious metals, be it silver or gold?
Sure, it's 800-822-8080, and if you have any inquiries for me, just email ahoffman@milesfranklin.com.
Well, Andy, any final words for the audience? As today really is a landmark day. It's funny that we're having this conversation on a day where the Fed has just said more of the same, and in fact, worse than more of the same.
Yeah, I mean, it's endgame. It's endgame. They're announcing money printing just as they're about to announce a fiscal cliff deal, which should tell you what the deficit's going to look like next year. And if you don't think that inflation is going to be a major part of the mainstream landscape 12 months from now, you've got another thing coming.
Well, Andy Hoffman of Miles Franklin, we sure do appreciate your time, as always. Let's keep in touch on this thing because things are shaping up so quickly and changing so quickly. We may need to get you on again in just a couple of weeks because we've got the fiscal cliff, and we have December 21st barreling down on us. Andy, is it the end of the world?
Yeah, well, it's the end of the world financially. We'll see what happens December 21st, though.
All right, my friend. Thank you so much for your time, and we'll talk again soon.
Great. Thanks. Bye-bye.
Well, thanks for watching. I don't say it enough. I sure appreciate your support. And be sure to check out thelibertymill.com. Real news 24/7. Thanks for watching.